Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're talking about UK house builders, and my guest is Chris Beauchamp, Chief Market Analyst at IG. Good news for house buyers has been not such good news for house builders. A prolonged period of high interest rates and high inflation, meaning £18,000 has been knocked off the average asking price for a British home. So says property website Zoopla, which concludes that pressure remains on those selling homes to accept lower prices. A key test comes this week when Barkley delivers its earnings. Back in September, the high-end developer reaffirmed its profit forecast, but joined other home builders in highlighting a gloomy trading environment. Well, IG's Chief Market Analyst Chris Beauchamp has been looking into this sector. Chris, it's been a terrible 2023 for this sector, and 2024, according to Perm, could also be a very uncertain year. So are things on the turn at the moment, or perhaps not?
I think in the past couple of months, they may well have done, actually. The broader environment has shifted quite dramatically, actually, I think in terms of risk appetite and the outlook for inflation. It all seems to be coming back in line with where central banks want it to be. And if you look at the UK, well, there's certainly no talk of a rate cut yet. The overall atmosphere seems better. If inflation is easing, then that's easing the pressure on consumers. It's still much harder to get a mortgage than it was. But maybe over the next 3 or 4 months, we see those conditions begin to ease too. Perhaps some of these house builders might see quite significant upside into the next year.
Now, if we compare and contrast UK home builders with those in the US, their US peers seem to be doing rather better this year than in the UK. Is that the right impression? And if so, why is that?
Well, very much so, I think, and it mirrors the overall performances of the US versus UK stock markets generally, and the two economies. Really, one has recovered far more strongly from the pandemic and has been in a much better position all the way through the past 2 years, really, despite cause of recession. That's the same can't be said of the UK. So I think that, if you like, the poor performance of the sector versus the US is justified. But maybe some of that, again, begins to close now, I think, because the impact in the US of everyone having 30-year mortgages or being far more available than it was meant that the sector wasn't as hit by these rate rises as it was in the UK, where these short-term mortgages are far more common. And as we know, the full hit of those interest rate rises is yet to be felt in the UK housing market.
Now, as we mentioned at the start, Barkley are reporting this week. Could we expect something a little more upbeat than their last trading statement? And how are they positioned in the sector overall? Well,
as one of the higher end, of course, then they've been slightly more insulated from the worst of the downturn. I think it's interesting to compare it with Persimmon and their gloomier outlook just a few months ago. With Barkley, we're expecting a much more improved performance, even after the solid figures they had at their most recent earnings results. So I think we're looking to them to lead the way. And again, if you're looking at maybe for income stocks, then certainly Barkley and others in the sector have been very good at returning funds to shareholders. I think you'll get a further bump in the dividend payment when they report.
And what of Persimmon, Taylor Wimpey and others in the sector? Who are you watching and why?
Well, I still think probably Persimmon, because of its broader dominance within the market. I think it's still positioned itself quite nicely in terms of its land bank and its financial reserves. So if you're looking at one that might do better, then Persimmon might be it, I think, for the year ahead.
And you say in your notes that the sector really needs a big catalyst to propel it forward. What could that catalyst be?
Well, in the old days, we'd have said something from the government, but I think that's unlikely, even with an election year approaching. Maybe the Bank of England, a first rate cut, if we could even dare to hope, dare to dream on that front, for next year, could be the thing that just lifts a lot of the sentiment around the sector. The key thing with the performance this year has been the rallies haven't been sustained. You see the optimism surge and it fades away again. And the worry, I think, for investors now is the latest bounce you've had over the past month. Is that going to go the way of all the others, or are we on the cusp of a more meaningful breakout to the upside?
OK, Chris Beauchamp, Chief Market Analyst at IG. Many thanks for sharing your thoughts today. And that is your roundup of UK house builders. I'm David Pollard, and this is Reuters.